Hey everybody, it's Kayla back again with another video. I had a subscriber ask me recently to talk about the differences between high finance and non-high finance jobs. I also frequently get asked if there are financial analyst jobs that aren't 80, 100 plus hours a week. They want to know, are there financial analyst jobs that are more of the standard 9 to 5, 40-hour work week type of job? To start off with, high finance jobs are the most prestigious jobs in the financial world. They're also some of the most highly coveted jobs, period, across the world. In high finance, you are often dealing with and working on deals in the millions of dollars range. In non-high finance, you are working on smaller scale type of projects usually. You will be helping a company with its everyday activities and responsibilities. If you want some examples of where high finance professionals work, you can find high finance positions at investment banks, hedge funds, venture capital firms, private equity firms, and ultra high net worth wealth management firms. Non-high finance positions would be like a financial analyst for a company like Verizon, AT&T, your local water company. It could also be a job like an actuary for an insurance company, working in the mortgage industry as something like a mortgage loan originator, also known as a mortgage loan officer. You could be a financial advisor working for a company like Raymond James, Edward Jones, etc. You could be working as a credit analyst at a place like Chase Bank or Citibank. You could work in anti-money laundering, or you could work in an audit department of a company. You could also work at your local bank, say Bank of America. You could be a personal banker, you could be the manager of a bank, or you could be a regional manager of a bunch of retail banks. In most of the non-high finance positions that I just listed off, you will likely see these jobs having hours more in the 40-hour range. There are exceptions, of course, where there is overtime that is needed, and some companies will pay you overtime for the time that you work over 40 hours, but there are some companies where your job is just expected to work over those 40 hours and your salary is your salary and that's it. You just basically deal with the extra hours that are put onto your plate and you continue working to just get the job done. In high finance, you shouldn't really expect anything under 60 hours. Especially when you're first starting off, you should really expect 80 plus hours a week. And when people think about that at first, they think, how can you possibly fit in 80 plus hours of working in a week? And if you talk to anybody that has worked in high finance, they would just laugh and tell you, oh, it's possible and it happens. The 80 plus hours that you will be working in a high finance job isn't always filled with high impact activities. When you're starting off in high finance, a lot of times you're doing the grunt work, and then as you work your way up the ladder, you are being more exposed and being allowed to be forward facing towards clients and making deals happen. As you climb up the ladder, your main responsibility is to make sure that those deals get through, that clients are happy, and the place that you're working is making millions upon millions of dollars. Another main difference between high finance and non-high finance jobs is that in high finance positions, bonuses are a huge part of your overall compensation that you make each year. A lot of times for the higher up positions in high finance, it's not unheard of to hear that the bonuses are 6 figures, sometimes 7 figures, and occasionally 8 figures. A lot of times when you're high up in a high finance position, your base salary will be something that in the grand scheme of things doesn't seem like a ton of money, and your bonus is just as much as your base salary, if not more than what your base salary is. Professionals in high finance are very determined to get their bonuses, and they're not happy when bonuses are not as high as they expect, if that is to happen. In non-high finance jobs, bonuses could be seen depending on, what job you're actually working. Take a regular financial analyst at maybe like Verizon, for example. A starting out financial analyst at a company like that, and once again, this is going to depend on where in the United States you're working, but in a medium cost of living city, you should expect to start your career off between $45,000 and maybe $50,000 per year as a entry-level financial analyst for a company like Verizon. The bonus that you could see, there's a couple ways companies like that do bonuses. They might do a percentage of what your salary is per year, or it'll be prorated to the amount of months that you worked at that company. So let's say you started at $45,000 on January 1st as a financial analyst, and the bonus structure is 10% of your yearly salary. Your bonus would be $4,500 before taxes. Sometimes bonuses can be more about the amount of production that you've done, say for like a mortgage loan originator, where commission is definitely a part of the structure of how you get paid. For financial analysts in non-high finance roles, you should expect to top out around 6 figures, $100,000 a year, depending on what city you live in. For medium cost of living cities, you should expect to top out between $80,000 and $100,000 per year, plus whatever bonus structure the company you work for has in place. For a higher cost of city like New York City, when you're working in a non-high finance financial analyst role, you could maybe expect $150,000 topping out, plus, once again, the bonus structure that the company you're working at has in place. I would not consider a CFO to be a high finance position, just because a CFO is more of a corporate finance type of role and job. And a lot of people are surprised to find out that not all CFOs make 7 figures a year. It really depends on what company they work for. And a lot of times the companies hiring a CFO want them to have more of an accounting background. For non-Fortune 500 companies, a CFO could be seen making around $250,000 a year. Nothing to sneeze at, but part of the reason why high finance is so desired and sought after for finance majors and people wanting to pick out a career for themselves is because you can make that $250,000 in 3 years of working at a high finance position when you put your salary plus your bonus on top of that. Is high finance necessarily better than non-high finance jobs? No, not necessarily. It really depends on the variables in your life that you think are important and what you are able to make possible for yourself, because like I said earlier in the video, high finance jobs are very, very competitive and there are only so many spots open. They very much care about where you went to school, what your resume looks like, where did you get internships at, your GPA, and more. Not to say that non-high finance jobs don't also care about those things, but it's not quite as cutthroat as high finance jobs. You need to really decide what's important to you, and you also just need to see where you can position yourself in the future. It's not unheard of to hear about people who start off in non-high finance jobs and transition into a high finance position. And it's also not unheard of to hear of somebody who started their career in high finance and then transitioned into non-high finance jobs. A great benefit of high finance jobs is that when or if you decide to leave, let's say investment banking, for example, when you leave that position and you have that experience on your resume, it looks great that you have that experience. And because you have that experience, it's easier for you to transition into something else. You don't want to work in investment banking for the rest of your life and you want a position somewhere else, for whatever reason. It'll be easier for you to pivot into something else because you had that investment banking experience or other high finance experience. That can't always be said for non-high finance jobs. Sometimes when you're in something like audit, or if you've worked as a mortgage loan officer your whole entire career and you suddenly want to pivot somewhere else, say you want to work for a private equity firm, it's going to be a lot harder to become an analyst for a private equity firm, an associate or higher, working at a private equity firm with those previous mentioned positions and experience. It just doesn't translate as well as if a investment banking professional applied to a private equity job. The number of non-high finance jobs definitely outnumbers high finance jobs, and they're more widely found across the United States. There are retail banks in every single city across the US. In every single city across the US, people are buying homes and need a mortgage loan officer. There are insurance companies who have headquarters all across the United States, so they need underwriters and actuaries. But when it comes to high finance, so investment banking, private equity, hedge funds, venture capital, being a wealth manager for ultra high net worth individual or family, those kind of jobs are more concentrated in areas like New York City, the San Francisco Bay Area, Chicago, Miami. So if you're somebody who doesn't necessarily want to live in those areas, then I would tell you maybe non-high finance jobs are more up your alley. So I hope you guys enjoyed this video of me talking about high finance versus non-high finance positions. If you enjoyed it, be sure to give it a like. If you're not already subscribed, be sure to hit the subscribe button. If you have any comments or questions, be sure to leave them down below. And until next time, I'll see you around in another one of my videos. Bye!